Hello friends. They say India is a land of opportunities. If you look at the Indian landscape in terms of investing, we've seen mutual funds and within mutual funds, ETFs, which is exchange traded funds and index funds, becoming extremely popular. Now within that space, we are seeing investors invest in large cap, mid cap, and we are happy to launch the small cap ETF, which is essentially ICICI Prudential Nifty Smallcap 250 ETF. And the NFO dates are June 9th to June 16th. And essentially the reason for launching this NFO right now from a timing perspective is that if we look at the last 2 years, it's been difficult time for India. We've seen our currency actually get hurt because a lot of foreign selling has happened in India. It has been the largest amount of foreign selling, and that has also dampened the splits on the mid and small cap side. If we look at the outlook as far as India is concerned, India is a 140 crore plus population where the demand for goods and services is going to be strong. And while today we can probably see the pain of foreign selling, there will be a time when they will come back. If I stick to the specifics of the NFO itself, it is out of the Nifty 500 stock universe. If you remove the 100 large cap and the 150 mid cap stocks, then you are left with the 250 small cap stocks, which essentially becomes the ETF itself, which is the small cap ETF. Now, the beauty is this is basically a diversified portfolio. No single stock in the small cap ETF is more than 1.5%. So you get a good diversification over the stocks. And if you look at the sectoral weights also, generally in the large cap universe or generally the weights in finance are significant because these are larger names. In the small cap 250 ETF, the spread of sectors is pretty even. If you look at finance, capital goods, chemicals, there's a good amount of representation there. And many new sectors in India are coming up, like diagnostics was a new sector which came up. Even within insurance, less than 10 years, 15 years back, there were hardly any companies which were listed. So as newer sectors get developed, be it education, be it new age businesses, there will be opportunities within the small cap space which will come up. And because this index is reconstituted or rebalanced every 6 months, these newer entries will also get participation automatically. Now, if we look at from an allocation standpoint, how should you go about with it? Is India cheap today? The answer is maybe we are getting cheaper because 2 years of underperformance. And so from a portfolio perspective, starting and building the small cap ETF in your portfolio slowly over a period of time will make a lot of sense. Next 6 months to 12 months is a good enough time period to spread your investments because the world is uncertain right now. We all know that. But then investing in equities is one of the ways of beating inflation. And as many Indians have found out that over a long period of time, if you invest in equities, you are able to get the benefit of participating in India's growth, right? Because it's essentially the corporate profits which are representative of the growth in India's GDP, which get eventually represented in the companies itself. So from an investing standpoint, keep a look of how you want to structure a portfolio. On an overall basis, we do believe that the NFO is a good addition in terms of you looking at the small cap space at a time where it has underperformed the large cap and mid cap space in the last 1 year. From a timing perspective, it may be a good time to start adding on, and over a period of next 12 to 18 months, if you can basically accumulate based on your overall allocations, it will be a good fit to participate in India's growth journey over the next 5 to 10 years. Thank you.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.